Hello guys, what's up? Now we are back with fair value gaps episode. Sorry for the last day. I cannot upload the video because I was a little bit buzzing. But let's explain fair value gaps today. We will explain everything in the fair value gaps, how it works, what it does, and what type of fair value gaps are here. So we have three types of fair value gaps. We have bullish fair value gap, we have bearish fair value gap. We have at the end we have implicit fair value gap, okay? And I will explain what is that later, okay? So what is the bullish fair value gap? It's also called the BC. You can see, let me, buy side imbalance, sell side imbalance. Okay, so BC is the bullish fair value gap, right? And CB is the bearish fair value gap. Sell side imbalance, buy side. Okay, so what are imbalance? Imbalance is the three candle formation where price makes a gap between these three candles right here, as you can see. So this is the yield for the price action. It comes back, fills this imbalance. So this is the institutional order pointed rule, okay? It's like a gap from the candle. Let's say we have weekly opening gap, right? It's like that gap, but this is a gap between candles, okay? Like this. And we have implicit fair value gap, which you may see this as a rebalanced value gap, okay? But we actually use this as, give me a second. Okay, so you need to mark these candles wicks like this, okay? Like this. And use the equilibrium price range of these candles wick right here, as you can see, and use the equilibrium price range of this week, okay, right here. So I honestly do not use this implicit fair value gaps, but as ICT said, this works, okay. This is for 2023 mentorship. He said this on the live. So this is a low probability imbalance, okay. This is a high probability imbalance, this is low probability imbalance, okay. So this is an inefficient price action. Why is this inefficient? Because price this three candle right here didn't came back and filled right here, okay. So this becomes inefficient, where price comes back, chase the yield, fills it, and goes away, okay. So let's go on a live chart. Wait. Before we go on the live chart, I will need to explain what is the intermediate term high on the imbalances, okay? So let's say when a price comes back right here and shifts market structure, comes back, fills again order block, fair value gap, or any other price level, and goes away. So this becomes right here intermediate term low. Right here. This becomes intermediate term low. So what is the intermediate term low? Intermediate term low is low. It's like a swing low, okay? Give me a second. Or swing high. So we have two types, intermediate term low and intermediate term high, okay? So this is intermediate term high right here, because we have two short-term highs right here, 1 and 2. So this right here becomes intermediate term high. And same right here, because what does intermediate term price level means? That it means that it may not be taken, okay? So when price rebalance, this level may not be broken, okay? To keep price moving bullish. So it's same on the bearish. Give me a second. So we have intermediate term low right here, and give me a second. We have short-term low right here. As you can see, we have intermediate term low right here, and we have short-term low right here. So price may not broke this to keep moving higher, okay? It's pretty simple to understand. So when price comes back, this becomes intermediate term low if price shifts here, okay? Listen carefully. If price fills this fair value gap and shifts, this low right here becomes intermediate term low. Gonna give you a better example right here. Give me a second. Okay. So let's make a candles. Make it black here. 1, 2, and 3 candle right here. So one short-term low right here, intermediate term low, and boom, price expands. So it's same on the bearish right here. So price comes back. 1, give me a second. See it. 2, and boom, price expands. So this is a pattern that repeats almost on every fair value gap. And let's go on the live examples. I'll show many